Hey, Colorado Springs. This is Jenny Bayless, and I am back with an interview with one of our investors, Garrett Dilly. Garrett, how's it going?
Very good. How about you, Jenny?
I'm doing well. Thank you so much for coming on the podcast today and
Sure.
sharing your experience. We really appreciate it. And I think that you're going to have a lot of really good pieces of advice for our audience. So thank
Well,
you.
thank you for the invite. I'm glad to be here.
Yeah, absolutely. So, tell us a little bit about your investment journey.
Sure.
Just kind of, properties, you're in the Colorado Springs area, how long you've been investing, and we'll just kind of go from there.
Yeah. I think if I look back in terms of when I got started in real estate, it was back around the bank crash right after that. But at the time I was acting as a lender for a flipper in Denver. That I happened to have a friend that was part of that development company. Fast forward to mid 2000s, 2017 ish, I guess. Um, I was really looking for an opportunity 2015, 2016 to get into rental properties and wanted to consider the best way to do that. First thing I did there was what a lot of people would do, which is take my single family that we lived in at the moment, and when we moved to a new house, actually turn that first one into a rental property. It was in a very good area. It made a lot of sense. It was an area that was bringing more amenities in, and people really wanted to live there. So it made sense to do that. And that kind of got the journey of the rental properties kicked off. Since then, I've added some additional properties and specifically focus most of my investing here in Colorado Springs area.
That's great. And I know that you worked with Envision on the acquisition of, the later half of your portfolio.
Sure.
Um, I kind of like your story a lot because you bought them around similar times. So we can kind of compare the mixture of single family and multifamily.
Yes. Yeah. Because of that, there is some more direct comparisons that can be made when you think about cash flow and things like that. So it's good.
Yeah, absolutely. I know we kind of got these properties like during, where you have to pledge like your firstborn for for to get it under contract. So
You moved fast in every single one. Yeah.
absolutely. But, I think on the flip side, you were able to take advantage of some fantastic 30-year fixed rates on your rental properties. So, that's definitely going for you on that. So,
Mhm.
let's dig in. One of the main topics that I wanted to chat about with you is kind of your experience between owning a single family rental property and a multifamily rental property, and
Sure.
just kind of the nuances between the two, cash flow, management, anything that really sticks out to you for our audience to learn from would be great for you to share.
Sure. And I think there we can start with cash flow. It's the simplest one.
Hmm.
And as I think about that, it's sort of the obvious what you might anticipate, and that is the multifamilies have had a tendency to cash flow a little bit better. Now there are exceptions to that, and in certain neighborhoods, I've seen certain single family home neighborhoods, the rents move up more quickly there, so they're starting to actually get closer to what the multis see, but I would say across the board, it still is the case that cash flow is better in the multifamilies, and that will likely continue, albeit obviously interest rates and purchase prices are fluctuating right now, so
Hmm.
that will have an impact on all of that. But I would say, as a general rule, those still apply, and that is the multis have been the better cash flow instruments. Now, if we then think about management and just the things that are necessary there, I think one of the key things to think about is in some cases, you have multifamilies that have separate meters on every utility.
Mm-hmm.
In many cases, you have separate utilities on certain or on separate utilities for certain utilities, but then other things are common, like maybe sewer, water, that type of thing.
Mm-hmm.
So there's typically in that case a little bit more management required simply by virtue of having to bill back for the use that the individual tenants are having in that case where there's not a meter. So it's just a little bit more in terms of the paperwork, in terms of your monthly. I use property management for it, but I still have to go through it myself. I still go through it.
Mm-hmm.
I still look at it, make sure that it makes sense. And certainly transitioning over when you acquire a property, that's got some pieces looking at the old lease and the new leases, et cetera, and the transition. Luckily, I've gotten past all that, but still, there are elements there that need to be managed. I think the other thing that I heard an investor say this once, and that is, and I thought it captured it well. When you think about a single family rental tenant, they often want to look at this as this is their house. They can walk around that 360 degrees, they can plant flowers. It is their place, including the yard and everything. Whereas multifamily, there's a little bit different of a relationship with it, at least in the typical, I guess, viewpoint of from a tenant's perspective, and that is they might not utilize the outdoors so much.
Mm-hmm.
They're really looking to live in their apartment and they park their car out front. What I do find is that leads to a little bit more maintenance on the outside that is necessary, and not the least of which is just even in the stairwells and things like that, having to maintain that and stay on top of it on a more regular basis. With the single families, I've been lucky enough that the tenants have taken really excellent care of the exterior of the property and also of the interiors. But in the multis, I think there's that group mentality type of thing that happens. It's sort of the idea you don't think it should happen, but if somebody opens their car door in the Walmart parking lot and a candy wrapper falls out, do they lean over and pick it up, or do they let it blow in the wind? And I think when it's a shared outside or something like that, there's a little bit more of a tendency to kind of let that drift in the wind. The other thing that is important to point out is oftentimes these multifamilies have been built in an area where there's multiple multifamilies. So it
Mm-hmm.
might even be the tenants in your building. You might take excellent care of the front. I really do sweat the details of the front and things like that. But the place next door might be a little different. And then that relationship with that exterior that the tenant has might be a little bit different. And so they might be a little bit more lax or something like that. So I definitely have seen that. And it's something that is notable for anyone considering, just because you're then needing to either take care of it yourself or pay on a regular basis to have someone go by. And while it's not expensive, it's still the trip charge and so on and so forth. I have certainly spent a lot more on landscaping and exterior of multis than I have on singles.
Okay. I think that the points that you brought up are absolutely phenomenal. I think everyone who's interested in investing in multifamily, rewind and listen to what Garrett just said, because these are all points that I think really just kind of escape a lot of people's thought process and mine included. Like I I'm a new multifamily investor, and the things that you mentioned, I'm like, yep, for everything
You've
that,
seen all of these. Yeah.
yeah, just things that I never thought of because they are small things, but as you mentioned, they all add up. And
Yes.
it's just kind of interesting. So again, just like listen to what Garrett just said, because I think that it's very, very important. Let's kind of talk about the exterior real quick, and I kind of want to
Yes.
touch on some of the points that you made.
Yeah.
Um, so one of the things that I've noticed is one of my properties lends itself better to having those individual totes for trash as
Yes.
opposed to the one big dumpster, because I think what we all know happens for the one big dumpster is people are driving by and they're like, oh, that's a great place to throw away a mattress or a
That's right.
couch or a bike or something ridiculously large. And, they probably don't even live there. So
Yeah.
I think that that's something that in one of my buildings, I'm able to do the totes. The other one doesn't lend itself just because of the driveway situation
Yeah.
to the totes. So just kind of, a little tip for anyone listening out there that the trash is a pet peeve, because it's totally a pet peeve of mine, just dumping.
It really is. And if I think about, one of the multis, thinking about when I acquired it. Okay, so I talked about, small pieces of trash. What had happened at that property was just the natural collection of stuff out front. And what
Hmm.
we had was a multitude of bikes that were all locked to each other. They were rusted chains, no one was using them. But we also had two vehicles in that parking lot that just sat. And when we approached the tenants after, we took it over, no one owned any of that. And so we had to, manage it out. And so we gave them all, notice and said, hey, we're going to be removing these items. If they are yours, please claim them. No
Hmm.
one claimed them, and we removed them. And it's great because now none of that exists.
Hmm.
But it is one of those things that will, if you don't stay on top of it, if even if it's not your tenants, things will appear, as you're
Yeah.
saying. And
Yeah.
I have done the same math you're talking about with, the dumpster versus the totes. And I agree, some properties lend themselves better to one versus the other. Totes, I think, are the better thing for keeping that sort of group mentality down, where the people down the street are not tempted to kind of bring things and throw them out there. But not all properties lend themselves to that. So something to look at, I guess.
Yeah, I think a lot of it has to do with kind of the way the driveway or the pavement is. That was the differentiating factor for ours.
Yeah.
But yeah, I think that, like, with the totes, you can assign unit 1, 2, 3, 4 to that tote. That is their tote. You are
Yeah.
responsible for it. But when it's just like anonymous trash, we can't assign anything to it. Whereas
Yes.
for a single family property, if someone moves out and there's a couch left behind, it's their responsibility. It's
Yeah.
clear as day. So I think it's just something that people need to think about as an added cost. And I don't even know how you could quantify it. Like, sometimes it happens, sometimes it doesn't. And just kind of keep that in the back of your mind as a, miscellaneous cost.
Yeah.
And as you said, I think that, you spend a lot of time buttoning up your property to the point where now it is managed. And I imagine that you have a lot less of those types of issues
Yes. Yeah.
for upkeep. So,
Yeah.
yeah. And then another thing you touched upon is the utility situation. Do you do bill back on actuals, or do you offer a flat fee?
We actually do bill back on actuals.
Okay. Have
Yeah.
you had any complaints about, oh, unit whatever is
Yeah.
taking up too much water or this, that, and the other?
Luckily, no.
Okay.
And it's been really peaceful in that regard. Really, folks have been very good about that, and I haven't seen a lot of sort of behavior that, keeping the window open and the heat on. Not that, we're kind of sticking our nose in the tenant's business all the time, but you do have a tendency to stop by these places, and you're aware. So, but my experience thus far has been pretty good in that regard.
That's great. That's kind of been my number one hesitancy to, well, first off, both buildings that I've bought, one had zero utility bill back of any type. Just like, yeah, not even conceived of. And then the other one, there's a lot of long-term tenants that have just had the flat fee.
Yeah.
So I'm very scared to kind of rock the boat and do actuals for that one, just because, like if people are budgeting their monthly expenses and they can expect X dollars in utilities every month, and then, we have a large gas bill for the boiler,
Yeah.
that could be kind of a surprise to some people, I think.
When we first converted one of them, the fee that had been being charged was across the board not enough.
Hmm.
However, when we first moved it over, I think they saw, in the summer months, they saw actually lower bills for that. But then as we got into the winter months and gas prices went up significantly at that time,
Hmm.
that they did move quite a bit above the what they had been paying on a monthly. Not quite a bit above, I would say, another 20 to 30% relative to what they were paying. But again, thus far, not really any problems with that, and we have had pretty good compliance in terms of just what we see in terms of the usage. Not all utilities are in any of the buildings. Not all utilities, in my case, are actually billed back. So there still are utilities that are in their name, which I think that gives them a little bit more sense of, I can manage this
Yeah.
piece. So
Yeah. That's great. Well, that's inspiring that, people adapted to that, because yeah, this past winter, I'm definitely taking a pretty big loss on my gas and water. It's definitely impacting the bottom line quite a bit from the boiler system. So yeah. And then just touching upon cash flow overall, being better for multifamily. Do you think that a lot of that has to do with like economies of scale, meaning, your taxes on the property, if you were to do it on a per unit basis, for example, or even
yeah,
insurance, do you feel like that helps a lot on your bottom line?
yeah, it really is the economy of scale, both from a purchase price per door type of situation, all the way to, yes, I said we spend more on landscaping in the multis, but it is also distributed, and so I think it's the economies of scale in managing and operating, and also on the purchase price per door.
Yeah, yeah.
So
So with your single families, you mentioned an interesting point. You said that you've noticed in some areas that the rents are rising at a faster rate than the multifamilies, for example.
yeah,
So how does that kind of adjust your strategy, if at all, and just kind of your general thoughts on that?
yeah, I think what I it wasn't completely outside of anticipation in terms of one of the areas, um, but it has delivered in that way. It's not like we bet on it.
Hmm.
In fact, I didn't expect it at all to be quite what it was. I just knew that, okay, that seems like there's a lot of good things going in there. It's an area that's changing, so I think there's an opportunity there. And so we've certainly seen that occur, and we've been able to capitalize on it with the rents. Um, but so I think in terms of what that says to me for strategy is really just being very aware of rents in specific areas. I think as I compared other multifamilies later, for instance, I started noticing there were certain parts of town which I didn't really anticipate or didn't see showing those higher rents originally, but then through this transition, they were really capturing much better average rents. So I think it's really more of a thing that speaks to specific areas. I am partial to single families. If the numbers make sense, it's harder
Mhm.
to make the numbers make sense there. But in the cases where they do, if the area is good, I think that those are the kind of things that people should be looking for.
Yeah, I agree, and I know what I'm about to say is probably blasphemous, but I actually prefer single families to multifamilies as well. And I know, the general consensus is you're supposed to, move from single family to duplex to fourplex to so on and so forth. And I just, I just kind of enjoy my single family a little bit more. Like I just really don't think about them as much as I have to with my multifamily because
Yes.
as you said, there's a shared living environment. So there's just more to attend to. Whereas I've noticed that even with my single family tenants, they'll often fix small things themselves,
Yes.
like a, door hinge or, small plumbing thing or something like that. I don't expect my tenants to like, they're welcome to call me if they need a maintenance request resolved. But I've noticed for the multis, I tend to get a lot more maintenance requests, and I don't really think that they're necessarily like built any worse. I think it's just kind of the attempt to repair is the differentiating factor in that. I don't know if you've noticed that as well.
I have, and again, I'm thinking of this one investor who was mentioning sort of the walk around the single family. The same in that same discussion, he mentioned, whereas in an apartment building, the outlook being, oh yes, there's a person down the hall with the tools that will come when the faucet's dripping or something like that,
Hmm.
and maybe that mindset prevails a little bit more in multis. I haven't seen that significantly to be the case in my specific cases, but we're talking about a small subset of the rentals out there, and it certainly just depends on the tenants. I guess I've gotten very lucky in the sense that we have had some we do have some very good tenants. And the one thing that I was curious about was in the beginning was this idea of longevity of stay for multi versus single family, and I have not seen a big difference yet, at least in my experience.
Same.
I've seen just as much movement in the single families as I have in the multis, and in fact, at this point in the multis, I feel like we're in good shape because we've got everyone onto your the second year, et cetera, and some longer term tenants, et cetera. So that actually has not necessarily played out that there's just this sort of revolving door. But I also think, and I'm anticipating is probably the case for you as well, is we really do try to give these people a pretty good place to live and
Hmm.
a reasonable rent. And they're in really good, nice shape. They've got a nice amenities. We've tried to improve the amenities and things like that. And so I think that tends to keep people wanting to stick around a little bit longer. So
Yeah, absolutely. Yeah, that's how we operate too. We want people to enjoy where they live,
yeah,
and try to do everything that we can. But yeah, I found the exact same. Again, very small population sample size, but I found the same thing. We have several tenants in our multis that have been there for years and years and years. Like multiple ownership changes, and those tenants have remained. And we have a couple of single family homes, kind of the same situation. So yeah, I think what you hit on is a good point, that just provide good living space, and people's lives happen around them, and if they like where they live, they'll stay, and if something changes, they'll head out. But
Yeah. Yeah.
yeah, and I think one of the benefits to multifamily is the obvious. If you have 4 units and one person is leaving and leaving that unit vacant, you don't have just an idle building, an idle
Yes.
property. You have 3/4 full still. So you're not probably cash flowing at that point, but you're at least holding yourself afloat
Yes.
on that. So that is a huge benefit, because as we all know, with single families, once that person leaves, all the operating costs fall on the owner to maintain until they're able to get that new tenant in. So
Yep.
so yeah, so I'm with you on that. It's funny that I don't know if it's just because that's what I'm used to is the single family over the multis. I might change my mind in a few years or so, but I'm with you. I think I like the singles better. But as you mentioned, it's the price to rent ratio is getting harder and harder with single
Yeah.
family homes, to the point where it hardly ever makes sense nowadays to just do a traditional long-term rental, at least in Colorado Springs. Yeah, so just with the interest rates and the purchase price is not dipping, kind of holding the same. It's
Not,
just, yeah,
not
it's
enough.
tight.
Yeah.
Yeah. So do you have anything else that you'd want to share to our audience, just as they start to, anyone who's maybe on the fence about investing, or, starting to get their ducks in a row, getting lending in place, that sort of thing? What could you share with new investors?
Yeah, I guess what I would say is it's important to get started, but I don't say that in a way where anyone should suffer any kind of FOMO,
Hmm.
because I think that's the last thing you want to do is be in a rush and therefore put yourself in a situation that that you'll regret in the future. However, what I do think it means is analyzing a lot of deals, and knowing what you're comfortable living with. And it may be, okay, this is not going to cash flow amazingly. Let's face it, good cash flow is still a small drop in the big bucket. I'm not
Hmm.
saying be irresponsible. What I'm saying is just take it in the context that it is, in terms of, and have reserves. Have reserves. Make sure you have reserves when you get into this, and then analyze a lot of deals. And if you are seeing things that are hitting your criteria, then start to take those steps moving forward, and don't sit and have analysis paralysis and doubt. At the same time, make sure that you keep yourself away from FOMO and rushing through something. I think the market has changed a little bit, so that is certainly in people's favor. I have experienced certainly very crowded markets where hours meant everything in terms of offers, and I don't think that's where we're at necessarily right now. And so that's something that people, if they are on sitting on the fence and looking, can really take advantage of, is the fact that it is a slightly different market right now in that regard, and therefore they should have that time to be able to analyze multiple things and look at different strategies. But once you get once you eye that right thing and you've done the math, then I would say it makes sense to get started. It may not be a home run, but my experience is, there's only a few home runs, right? Games are won on base hits and doubles. So
Absolutely. Yeah, I couldn't agree more on that. And just, I don't think there's ever such a thing as a perfect property.
yeah,
Every single property that I've bought there's been some little, instance of, oh, I'm not a big fan about this, or I'm not a big fan about that, but I am very happy with our portfolio. So it's just kind of, I think that's the name of the game with real estate, right? Like it's all about trade-offs, price versus, features, location, that sort of thing. So yeah, I think that keeping that in the back of your mind is that, like you said, if it's a base hit and this is your first property, like that may be good enough, to move forward, or at least put an offer in, at least try to do it. And I think that's kind of how you get momentum and confidence to keep going. And, I'm sure as you've noticed that, your, earlier properties versus your later properties probably were a little bit more paralyzing, but I think you moved up in complexity too. So it's just kind of interesting, how that works and the repetition that goes into it. And you're more easily able to figure out what your deal breakers are that way as well too. So I think that was great advice. So anything else that you would like to share? You think that anyone, may want to know? Or
I think those are the key things. I think we've hit the big ones that I was thinking of, and so I think everyone should give it a look for certain, because I think it is it's a good way of investing, is long-term rentals and short-term rentals, medium-term rentals. So
yep, with a long-term outlook.
With a long term.
Exactly. Well, Garrett, thank you so much for coming on and sharing your experience and giving advice to newer investors. I really appreciate the time that you took to come out and share that. And we'll have to catch you again and get you on the podcast a little bit later.
That sounds good. Happy to be here, and thank you for the invitation.
Thanks, everyone.
Great to speak with you, Jenny.
Thanks, Garrett.